While the world was busy arguing about whether a 6 to 7 score on TikTok refers to a height, a rating, or just pure nonsense, the financial tectonic plates shifted beneath our feet. Good evening. Today is Friday, December 19th, 2025. If you open your social media feed right now, you will see millions of people distracted by the 6-7 trend, a meme that dictionary calls brain rot slang. You will see nostalgia for Stranger Things 5 and debates about the new Zootopia movie. But if you look past the digital circus, you will see that the global financial system just fractured. Silver, the most manipulated, suppressed, and forgotten asset in financial history, has shattered its iron ceiling. It is trading near $66 an ounce. The mainstream media is already calling this a top. They're telling you that silver is expensive. They're telling you to take your profits and run back to the safety of the dollar. I am here to tell you that is a lie. It is a mathematical, statistical, and historical lie. The price you see on your screen, 66 SARS, is an optical illusion. It is what economists call a money illusion, created by a currency that is dying in real time. If we use the real math, the same math the US government used in 1980, silver is not at 66. It should be trading at over $600 an ounce. We are not at the end of the bull market. We are in the opening credits of the silver singularity. Today, I'm going to show you why the Japan shock has guaranteed a global liquidity crisis that favors hard assets, why Donald Trump's blockade of Venezuela just raised the floor price for every ounce of silver on Earth, and why the viral distractions of today are blinding the masses to the greatest wealth transfer of our lifetimes. I'm the wealth historian. Let's look at the charts they don't want you to see. To understand why silver at $66 is dirt cheap, we have to travel back to 1980. That was the last time silver truly captured the public imagination. The Hunt brothers cornered the market, panic swept the comics, and silver hit a nominal high of $50 an ounce. Now here's the trick. In January 1980, that $50 could buy you a tailored suit on Fifth Avenue. It could buy you a high-end dinner for $4. It could buy you 15 shares of Coca-Cola. Today, $66 buys you maybe 2 movie tickets and a bucket of popcorn. This is money illusion. You see the number go up and you feel richer, but you are measuring your wealth with a ruler that is shrinking every single day. Let's look at the data. If you adjust the 1980 high of $50 using the government's current watered-down CPI numbers, silver would need to be at $170 just to break even in purchasing power. We're barely 1/3 of the way there, but it gets worse. If you use the original 1980 CPI formula, before the Bureau of Labor Statistics started tweaking the basket to hide inflation, that 50 peak is equivalent to $606 in today's debased US dollars. Think about that. For silver to simply match the purchasing power it had 45 years ago, it needs to rise another 900% from today's price. This isn't a bubble. This is a compressed spring that has been held down for 4 decades. And right now, the hand holding it down is slipping. We are seeing a gamma squeeze on the COMEX. As the price rises, market makers who sold call options are forced to buy futures to hedge their exposure. This creates a reflexive feedback loop. Buying begets more buying. While the 6 to 7 trend on TikTok has people shaking their phones to see a Google Easter egg, the bullion banks are shaking in their boots. They are short a metal that is running out. But price is just the symptom. The disease is in the bond market, and the patient zero just showed up in Tokyo. While American media was distracted by entertainment news, the Bank of Japan dropped a financial nuclear bomb. In the last 24 hours, they raised interest rates to 0.75%. I know, 0.75% sounds like a joke. But in Japan, where rates have been near zero for 30 years, this is a seismic event. This move pushed the 10-year Japanese government bond yield above 2.0% for the first time since 2006. Why does this matter to your silver stack? Because for decades, hedge funds have borrowed money in yen for free to buy US stocks and treasuries. It's called the carry trade. It was the infinite money glitch of Wall Street. Yesterday, the glitch was patched. The cost of borrowing yen just spiked. This is forcing a massive unwind. Capital is fleeing the paper system. Usually, in a liquidity crisis, everything sells off. But look at silver today. It's up. Why? Because the market smells blood in the US Treasury market. Treasury Secretary Scott Bessent is now trapped. He has to refinance trillions in US debt, but the Japanese buyers are gone. He has signaled a strategy of relying on short-term T-bills to fund the government. This is what we call fiscal dominance. The government is essentially funding itself using a credit card because it can't afford a 30-year mortgage. The Federal Reserve cannot raise rates to fight inflation because it would bankrupt the Treasury. They must print. They must debase. Smart money sees this. They know the dollar is being sacrificed to save the bond market. That is why silver is decoupling from the stock market. It's not just a commodity trade anymore, it's a vote of no confidence in the central banks. So we have the monetary fuse lit. Now, let's look at the physical dynamite. Silver is unique, gold is money, but silver is a strategic energy metal. You cannot build the modern world without it. And right now, three forces are colliding to drain the global supply. Force number one, the solar singularity. Solar demand is growing at 17% a year. The new solar cells, TOPCon and HJT, use 50% more silver than the old ones. The industry is price inelastic. They have to buy silver whether it's $30 or $100. We are in the fifth consecutive year of a supply deficit. Force number two, the AI boom. Every time you use ChatGPT, you are using silver. The high-performance connectors in AI data centers rely on silver's conductivity. This is a brand new demand vector that didn't even exist 5 years ago. Force number three, geopolitics and energy. Just yesterday, President Trump ordered a total and complete blockade of Venezuelan oil tankers. Oil prices jumped immediately. Why does a blockade in Venezuela matter for silver? Because mining is energy intensive. Diesel is one of the biggest costs for a miner. When oil goes up, the floor price to pull silver out of the ground goes up. Inflation is being baked into the supply chain. And look at what the smart money in the mining sector is doing. Just today, First Majestic Silver, one of the biggest names in the game, announced they are selling their Del Toro mine to Sierra Madre Gold and Silver. Read between the lines, First Majestic is clearing the decks and raising cash to optimize their portfolio. Meanwhile, juniors like Sierra Madre are scrambling to acquire ounces in the ground. When the big boys start trading mines like baseball cards, it means they know the inventory is valuable. They know the ground is worth more than the paper. I want to end on a psychological note, because the biggest threat to your wealth right now isn't the Fed or the BOJ or the price of oil. It's your own mind. Human beings suffer from normalcy bias. We assume tomorrow will be like today. We see silver at $66 and our brain screams, that's too high, it has to crash. But look at this chart. This is the silver to S&P 500 ratio. In the year 2000, silver was forgotten while the dot-com bubble raged. When that bubble burst, silver started a run that didn't stop for 11 years, rallying 500%. We are at that starting line again. The ratio is just beginning to turn. The S&P 500 is trading at record valuations while the economy crumbles. Silver is the lifeboat that everyone ignored. Look at the 6-7 trend. Look at the Zootopia 2 memes. The herd is distracted. They are laughing at nonsense while the financial system is being rewired. This tells me we are not in a bubble. In a real bubble, your taxi driver gives you silver tips. In a real bubble, TikTok is full of teenagers showing off silver bars. We aren't there yet. The public is asleep. This rally is being driven by institutions, central banks, and the few awake individuals who understand history. When the 6-7 crowd finally wakes up, when they realize their savings are melting and they try to rush into this tiny, microscopic silver market, that is when you will see the real mania. That is when we go from $66 to $150 to $200 to numbers that sound impossible today. Don't let the $66 price tag fool you. In real terms, silver is cheaper than it was in 1980. It is the most undervalued asset on the planet. If you own physical silver, hold the line. If you don't, do your research fast. The window is closing. The Japan shock has started the clock. The shortage is real, and the $600 lie is about to be exposed. I'm the wealth historian. History doesn't repeat, but it rhymes, and right now it's screaming.